We have Louise on the line from Fox Creek, Alberta. What's your question for David?
Hi, my question for David is Shopify, and if I could get a street consensus, that would be great.
Sure thing, Louise.
Sure. So Louise, as you may know, Shopify is a company we've recommended on this show a couple of occasions. And this is one of those companies in Canada that does play into one of the most important themes, the secular long-term shift to web commerce. And Shopify, of course, providing a platform and infrastructure for small to mid-sized e-commerce companies on the web. They just continue to get stronger. I mean, they're so strong that Amazon shut down their competitive product to Shopify.
Really? And here's a name that can actually scare Amazon.
Right? In the last quarter, they went from 400,000 users to 500,000 users of their platform, companies selling things on the web. Their earnings were up about 85%, their revenue's up 75%. So this is a company that is firing on all cylinders. It's a key player within the web commerce theme, and we know that the size of the market is huge. Realistically, they probably could have 5% of the market, and they could get as many as 10 million users over time. So this is a big, big market. Now, the downside is, of course, really this is a momentum-driven company. It is a very, very high multiple. It trades at about 10 times enterprise value to sales. And realistically, if they were to miss or have a miscue operationally, stock's going to get hurt.
Yeah, a bit of pain, especially after the run-up we've had.
Right. But they're dominant in what they're doing. And so if it's a piece of a portfolio, right, your portfolio is going to have a lot of different types of risk in it. This is one that is squarely in the middle of a secular theme, so it's a holding that we continue to hold in our portfolios. And I would continue to buy it here. If we do get a little pullback over the next couple of months, it'd be a great opportunity to buy it on a bit of a dip. But this is a leading stock.
Okay, Luis, as far as the street's concerned, there's only one analyst on record on my screen anyway who follows it, but he likes it. He's got a buy on it. All right, we got Dean calling in from Kelowna, BC. What's your question for David?
Hi, Greg. Hey, Greg, thanks for doing a good job. You're always the steady guy behind things here, and I appreciate it. And I gotta say, I'm disappointed by BNN and their coverage of Charlottetown. I mean, it's so one-sided. I wish you guys would get the police chief, African-American David Clark, on. He knows what's going on down there way better. I'm quite disappointed.
Oh, okay. Well, we'll put that to the management. But this is about stocks here, not about tensions in the
Dave,
States.
Macquarie Infrastructure, I just sold some of that and replaced it with the Mastech that you like.
Yep.
I'm just wondering why should Macquarie appear to be a little weaker than a company like Mastech?
Yeah.
Thanks a lot. Bye.
So when you look at Macquarie Infrastructure, there's a whole bunch of different types of hard assets and assets that are long-lived assets. It is going to act a little bit more like a bond because they're long-life, fairly predictable assets. Mastech is a company that is in a couple of secular themes, but it's a growth stock, and it is tightly tied to growth in a couple of areas. And so we think that the secular changes taking place in both telecom equipment and in pipelines is significant. So Mastech builds infrastructure like pipelines, and they also are very big in doing maintenance and infrastructure work on cell towers. So both of those are going through really strong lifts. And for instance, we're about to go through the process where all the telecom companies put up 5G equipment on cell towers. Mastech gets paid to do that stuff. So there's a cycle coming in front of it. It also has, of course, lots of business in the energy infrastructure space. And while pricing for oil may not be good, volumes really continue to grow everywhere. And so there's lots of work to be done in that area. So I just think it's a more targeted investment. It is not so dependent on interest rates, which something like Macquarie Infrastructure would be. If rates go higher, it makes long life, predictable assets less attractive.
All right. We got Richard in Lethbridge, Alberta on the line. What's your question for David?
Thank you for taking my call. I'm just interested in getting your opinion comparing the two stocks, Facebook and Netflix. I don't know if you own any of them. If you do, why? If you don't, why? And which of the two would you choose if you were going to purchase them? Thank you very much.
I love a stock showdown.
Listen, these are both dynamite companies with great opportunities in front of both of them. If I had to choose one, I choose Facebook. And I considered using this again as a top pick today. Done it before, so I thought maybe we needed some different names. But if I look out over the next year, Facebook just has so many different engines that are running, and almost none of them are dependent on another company. You know, we've seen in the case of Netflix, you know, huge growth in subscribers around the world, but still somewhat dependent on second or third party content.
There's a lot of deal making there. Right now, Disney wants to go up against them, not give them any more new
Right,
Disney
and you've
products.
seen all of these companies that create content one by one create their own over the top distribution processes, and it doesn't mean that there isn't going to be lots of content available, but there are things that could be roadblocks. In the case of Facebook, they create a lot of content. They've got a lot of different engines, and I think it's still relatively early days for a lot of their businesses. So there really is no competition to Facebook. So for that reason, I would prefer a Facebook.
And all about the advertising dollar, right? That Facebook, and the big challenge for Facebook a couple of years ago, as everyone was moving to mobile devices, can they bring the ad revenue with them? And I think they've proven to us that they can.
They sure have. And the other thing that Facebook has shown is that for their competitors who have brought competitive offerings like Snap, they've been able to recreate it and put it in their own platform. And so they're really creating an environment where they've got all these different levers to pull. And so there's probably a long way to go, and they've just got such a giant user base that's hard to deny they're really the leader in the space.
Okay, we're going to be back with David Burrows. He is President and Chief Investment Strategist at Barometer Capital Management. Wants to answer your questions on North American large caps, so give us a call, toll free, 1-855-326-6266.